would like, if I may, to take you on a strange journey.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am the Rebel Broker. Licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. Welcome to the show, folks. I want to thank those of you in the Rebel Underground for your great response to the first bit of exclusive content for the Rebel Underground that went out on Saturday. For those of you who might have missed out, you can still become a member of the Rebel Underground. You can go to the website at therebelbroker.com and you can get the little dialogue that'll pop up and ask you if you'd like to join. If you do that there, you will be getting onto the list for the Rebel Underground. You can also text the word Rebel Broker to the number 44222. That's one word, Rebel Broker, to the number 44222. Follow the prompts and you'll be added to the list. And in your welcome email, you'll get a link that will take you to the content that was just released on Saturday. Super happy with the response. I realize it's a first run at this kind of thing for me. And I appreciate the feedback I've gotten from folks, and I'm glad that it was useful for so many of you. So thank you very much for that. No other real housekeeping stuff. I was trying to think. There was something else I wanted to share with you today that was sort of an anecdotal thing. I guess the biggest thing that hit me today was I like, as I mentioned in previous shows, I will usually review all the various new listings and all that kind of stuff that happens on a regular basis, usually every morning. And what's interesting is about a month ago, I believe I shared a show where there were just tons and tons of listings that were coming up that were in that sweet spot, that 3 bedrooms or more, 2 bathrooms or more sweet spot that so many buyers are looking for. And what's interesting is there was that big push of them last month. Not so much right now. I've seen sort of that trickle really decline to a trickle. And a lot of these are now getting sold off. We're seeing these properties sort of getting sold through so that we're seeing more of an inventory challenge this month, which is kind of interesting. So obviously that's my local market. That is the, Morgan Hill, San Martin, Gilroy marketplace, which is just south of San Jose. We're still seeing pretty crazy markets up north of here. But really things are just kind of plugging along. I'm tending to see what's really interesting given that dynamic is over the last month, excuse me, I'm tending to see fewer properties that are going for way over asking price, where the typical amount that we're seeing is probably right at asking price. In fact, if I was to ballpark it, I'd say probably homes are selling at 98% of their asking price right now in my local area. So that's relatively balanced, right? Maybe going for a little bit less there. And if you take into account folks that actually reduced their price in previous months, because remember, we had that big surge of inventory, it's probably even less than that. If you go with the original list price, we had several properties that lowered their price to get sold. I think that trend is going to reverse over the next month because of what inventory has done. I think what we'll see is more homes going for asking price or maybe even a little over, just because that huge number of listings that I shared with you last time is that inventory is just gone. It's been cut by at least a half over a relatively small period of time. Okay. The usual things. In fact, this is a great time if you're a first-time listener to the show, welcome. Clearly, we're getting more folks because I'm seeing more and more folks subscribing to the show, taking advantage of the show. I want to let all of you know that there is a $50 Amazon gift card drawing that's going to happen over sometime in the next couple of days. The cutoff date is Wednesday. That's tomorrow at 5 p.m. Pacific time. But if you head on over to the website, find that red button at the top of the page. Now, the website's therebelbroker.com. There's a button at the top of the page titled Take the Survey to Support the Show. Give the same email address. Both times you're asked, answer a handful of questions, and that will enter you to win a $50 Amazon gift card. We've done this every month for the past 4 months. I've given out 4 $50 gift cards for a grand total of $200 to 4 lucky winners, and you could be the 5th. Just head on over, take that quick survey, provide your email address, and not only are you helping the show grow, but you're also giving yourself a shot at winning $50. So moving right along here, a story kind of jumped out at me. We're always looking for new ways to focus in on markets that we're potentially excited about, right? We've looked at it from a lot of different angles. Today, I wanted to go with an article from Risk Media talking about markets in the United States that are just about to experience a housing boom. Not a housing boom, a technology boom. Now, moving forward, we talk about a lot of the things that keep the economy moving or things that are likely to change in the economy. We've talked about what I've called sort of the second industrial revolution with a lot of the technology that's going to come around and change the landscape of jobs. Now, technology is one area that you can count on for a couple of things. One, there's different levels of technology jobs, and there are the jobs that tend to be filled before you see a bigger boom. And those tend to be the IT jobs, the jobs that are wiring a building for internet, for servicing employees who are going to need access to the internet, and tech jobs in general. So I thought, what a great time for us to sit back and look at the top 5 cities that are designated to have big tech booming happening in 2017. Now, this is all taken from a survey by Modus. Now, they're an IT staffing services provider. So that's great data to look at in terms of just the types of folks who tend to get hired first, or the folks who set things up for the other folks in a tech job. And that's the IT folks. Those are usually first folks in, setting up desks, setting up the plugs in your cubes for phones and for computers and everything else that you're going to need. And that's a great indicator of what might be coming down the pike. Now, let's go ahead and start with number 5 on the list. And this is a city that's actually been on quite a few of our lists over the last year in terms of indications that it would be a great place to invest. Now, that's Philadelphia. If I'm not mistaken, I think Philadelphia was actually also on our list of highest return on investment communities last year. I don't think we saw it on this year's list, but it was definitely one of those cities where investors were making a pretty decent return on their investment. And these were folks, remember that for those of you who weren't listeners then or missed that show, this is a list that was specifically focusing on folks who had bought their home or bought their investment property within the last year. So it wasn't folks who'd held onto property from long before. This was folks who had jumped into the marketplace and what had they enjoyed in that first year of investment. And if I'm not mistaken, Philadelphia had made that list. So that makes it overall an interesting option, particularly since we're seeing an increase in tech desirability in terms of what jobs are going to be offered in that particular community. Now, in past shows, we've also talked about Philadelphia having a relatively low barrier to entry in terms of prices, and the median sales price in Philadelphia is $159,900 with a median rent of $1,200. Now, here's what's really interesting about those two numbers. If we apply the 1% rule, and remember, in applying the 1% rule, what we do is we take the purchase price of a property, we take 80% of it, assuming that you'd finance the other 20%, and then we take 1% of that, and that gives us what we should expect to get for rent. And if we don't, then it's just on that first blush gives us an indication of how much of a challenge we might have in making a positive cash flow scenario with this property. So at $1,200 median, that's only $79 shy of the $1,279 that you get when you apply the 1% rule to $159,900. So that spells kind of an interesting option here, because if that's what the average is, you're clearly going to be able to find opportunities to do better than that. There are some pricier areas of Philadelphia, but in my quick view here, I'm not seeing anything too nuts. Of course, I'd want you to use the exact same techniques we've talked about before and that we talked about in that exclusive video for members of the Rebel Underground that came out on Saturday to walk through this process and see what areas you're most comfortable with. But even when I look at it from that standpoint, while there are some areas that at first blush I would probably avoid simply because of high crime, there are plenty of great pockets here right in Philadelphia that I think would work really well for a potential investment, at least in terms of location. If we look at the trends, the median sales price is up from February. The median sales price was $145. It's currently sitting, as we said, at $159. And the median rent per month started off in February at $1,099 and has settled in at $1,200 in February of this month, in February of this year. So an overall increase. All good trends. Mix that with our new data relating to potential job growth in Philadelphia in the high-tech sector, and that could make it a pretty amazing opportunity. Number 4 on our list is not going to be a secret to anybody. This is one we've had on tons of different lists. Whether we want to talk about increase in property values over the course of the year, if we want to talk about desirability in terms of job growth, in terms of the list we covered last year of the fun places to live, places that have the most activities. In terms of job growth last year, Denver is number 4, and so it makes our top 5 list again. And not surprisingly, really, given some of the news we've actually heard from listeners in Denver who've been talking about how crazy the market is. The one downside here is that while it's continuing to grow, and Denver is an area that is seeing a continued growth, obviously in tech jobs as well, it may be a scenario where this is one where the real value to take out of this, the real ability to ride the market to a much higher value may already be well underway. You may be to the point now where you're concerned that you might be at a peak as far as Denver is concerned. Given all of that, as you might expect, Denver does not really pass through that 1% test too well. The median sales price in Denver right now is $345,000, with the median rent per month of $1,995. Now, this is focusing really on downtown Denver. And from an investment standpoint, I'm not sure that makes sense. I think when you're talking about Denver, you need to include all the surrounding areas: Lakewood, Arvada, Westminster, Thornton, Aurora, Littleton, Centennial, and even a lot of the places that are kind of north, going all the way up to places like Boulder and Longmont. Those are a little bit far up there, but I know folks. I actually did a show remotely from Denver where I was looking at investment properties in Longmont, and the commute was perfectly reasonable, and the average price does do some migrating in different areas. For instance, over closer to Lakewood in the 80219 zip code, I'm seeing average list prices of $218,000. I'm seeing, 80216, which is extreme north end of Denver, $225,000. So there definitely is some variation here. You're not going to find barriers everywhere, but it absolutely is one of those towns that offers such a wide amount of space to cover that just staying right there in the Denver proper city limits, I think for investors clearly doesn't make any sense. You want to go where the money's going to be, but that's to sort of calibrate you what the market in general is doing. If we take a look at what the average numbers are, what's interesting is median sales price has actually dipped. It peaked in, it looks like August, September, and now is a little bit lower at 345. It was up at 361. So the amount of change here isn't that bad. 1 year ago in February, it was 325. So in terms of the amount that it's actually gone up, that's not horrible. But what's also interesting is that median rent per month has taken a dip. In fact, it was at about $2,000 in February, and now it's just under that mark. So while we've seen an increase in median sales, we have seen a decrease in rents. I would be very interested in finding out what the scope of that is. Now, this describes it as a per month for apartments in Denver. I think it would be very interesting to find out what the rental rates are in terms of single family residentials, because I'm willing to bet that's going to give you a lot more of a competitive indication of what you can get as an investor, obviously. Now, if you're going in there to buy smaller apartment units, those types of things, that's one thing. But for single-family residentials, you're going to want to go with comparing this to single-family residential rentals. Now, in folks that we've talked to before, these numbers actually tend to bear out the fact that rent is down in the apartment complexes, but was very difficult to get your hands on a single-family residential home for sale. There was just tons of offers. And it was a very much of a seller's market. So keep that in mind. I think it's a little bit more challenging in Denver, but there's a high probability that you could probably find something that would work. You just need to figure out for yourself, are you comfortable with the probability that you're at a market that might be at its peak rather than at least somewhere below it, so that you're going to enjoy maybe a little bit more growth in the market in your investment. All right, let's go ahead and jump into the next properties on our list. We're going to do that in just a second. We're going to take a quick break, so don't go away.
Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner-broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909.
Welcome back, everyone. We are running down the list of housing markets on the verge of a tech boom. So we're not telling you what happened last year. We're telling you about potential communities that are going to see a big tech boom next year or this year, based on the idea that some of the tech jobs that tend to indicate the startup of more tech jobs are seeing more hiring in that area. Now, we just covered number 5 and number 4, which was Philadelphia and Denver. Number 3 on our list is Boston, Massachusetts. Now, as we take a look at the average numbers for Boston, Massachusetts, we see that the median sales price is $330,000 with a median rent per month of $2,725. And that's actually not too bad, because remember, we're talking about, with that number, apartments in Boston, according to Trulia. There's been a lot of fluctuation in rents over the last year, but we are finishing, as I said, at $2,725, and last year it was at $27, so it's a little bit above where it was. Think of that as a relatively flat rent, depending on how you handle your rental properties. If you sign a year-long lease, then all this fluctuation that would have happened over the last 12 months isn't something you'd experience on a month-to-month basis. What's interesting is that prices have actually gone down a little bit. $330,000 is what we're seeing in February. And we peaked right around September at $440,000, and a year ago we were at $329,900. So things have actually kind of washed out. But if we take another step, and since we're in the top 3 of these, I thought it'd be good to do this. If we take a look at homes for rent in Boston, we can see that the rents are quite a bit more. looking at just single family residential. I'm looking at a minimum of, and I'm not going to look at any minimums. Let's just go ahead and look at it all. I'm seeing 31 for a 1-bed, $3,100. For a 2-bed, $1,900. For a 6-bed, $5,750. For a 4-bed, $4,800. Let's go ahead and put the limit here on beds here and just see what 3 bedrooms gets us here in terms of price, just to kind of, that's the meat and potatoes. So let's figure that out. $3,500, $2,400, $3,600, $4,900, $5,200, $5,250. If we then look at homes in the same area, but to buy, let me take a quick look there and see what I'm going to see and see if these numbers make sense. Let's see, $590,000, $499,000, $450,000, $4 million. That's a 9-bed, $749,000 for a 2-bed. This is all obviously higher end Boston. This is downtown. This is West End. In South Boston, I'm seeing a 2-bed for $571, a 1-bed for $400,000. Clearly, some of these won't work at $1 million price tags. But what's interesting is I think you might be able to make some of these numbers work in terms of creating positive cash flow. Here's a 2-bed for $379, and we were seeing 2 beds renting in this same area for that same to do the 1% rule in that same ballpark. So I think the feasibility here is good, but I think it's going to be for someone who's looking to spend a little bit more up front. If you want to move a little bit further out of Boston, let's see here. And let's look at affordability. So yeah, there are some areas that are going to be more affordable. Areas like Brookline, Mattapan, which is just south. I'm seeing median prices of $265, $260, $296, $240. So if you were to head down that way, those numbers would probably work better for you. So I think there's some opportunities here, but it may be something that's going to be a little bit more attractive to folks who are shopping at the higher end for their investments. All right, next on our list, number 2 is Houston, Texas. Now, Houston, Texas is interesting, remember, because we've talked about how Houston's sold data is not made public. It's considered private information, so sites like Trulia and others do not get access to them. I do need to give all of you an update on dealing with properties in Texas. Now, on a previous show, within the last couple of weeks, I was theorizing that you might be better off working with agents from a bigger office in Texas, since they would maintain those records within the business they do. Totally not something you need to worry about. I decided I should find out for sure exactly what's going on. So I actually reached out to the Association of Realtors in Texas. I called the folks in Dallas and talked with someone there who was very helpful. And what they tell me is that agents have access to it. Agents can absolutely run the numbers and get access to this stuff and find out what properties sold for through their multiple listing service. It's just that it's not data that's legal to share out with anyone. So when you are dealing with a real estate agent out there, it doesn't matter how big or small their office is, they have access to the same database of information. So I just wanted to, whenever I make a mistake, whenever I make a wrong assumption, I want to point that out first so that you guys can benefit from not continuing to think something that I put out there that didn't end up being true. So Houston is interesting. Lots of great areas here. Houston is a really large town, and there's a lot of variability in terms of the price you're going to pay. Now, the average listing price in Houston right now is $398,404, and the median rent per month is $1,525. Now, when we take a look at affordability, it looks like the area just north and west of Houston is a good bet. There is some expensive property right there leading right into downtown Houston. Average price closer into town, right around Washington Avenue and Memorial Park, $453, $409. There's an area $399.9, $419.50. But rents actually look pretty good when you take into account price. So, and as you get further out along the 610 and along the 290, you'll find properties dropping in cost down to $249, $224, and all in areas that actually look pretty reasonable in terms of investment opportunities. And in terms of homes that are for sale in those same areas, I'm seeing a pretty wide variety of prices here. I think these represent a lot of interesting opportunities. $100,000 for a 3-bedroom, 1-bath. $300,000 for a unknown. Is that just a lot? What is that? $350,000 for a 2-bed, 2-bath. As you get closer into downtown and some of the more desirable areas, you see $450,000, $420,000. But again, these are areas that also have rents that represent a pretty good boost. I'm seeing a 4-bed, 4-bath for $4,000 a month, $3,500 for a 3-bed, 4-bath condo. So there's absolutely room here, I think, for you to be able to make some money. And what's great is whatever your taste is, whether you're someone who wants to go into a marketplace and have some options that are not going to be such a barrier, that are going to let you invest without having to purchase a home that's $400,000, $500,000, $600,000, $700,000, you're going to find neighborhoods here that are going to work for you, that'll be positive cash flow, that have a relatively low barrier to entry. All right, number 1 on our list, And this one again surprises me. I don't know why. In my head, I have this bias against this city. And maybe it's just because in addition to reading real estate news, I read general news. But this particular property comes in at number one, Chicago. 51% of those surveyed ranked Chicago as the top tech hotspot of the future. The Windy City is likely to attract younger professionals who have worked in technology 5 years or less, according to this survey. So this is just starting out stuff. And it's interesting to see that Chicago is making this kind of a move where we're seeing so much potential employment moving there, particularly in the high-tech industry. If we take a look at some of the numbers, the median sales price in Chicago is $245,000. The median rent per month, and remember that's apartments, is $1,495. That's actually kind of an encouraging number. If we then take a look at what properties are renting for in terms of houses for rent, let's see. Lots of opportunities here in terms of variety. I like to put on the crime heat map to see if I can at least stay away a little bit from some of the bad areas. But, one other thing that's interesting to look at when you're doing this sort of a comparison is to have the rents popping up while you're looking at the crime heat map to see the effect of that on the rents. In some cases, it's interesting because you'll find that there's not a huge impact and could represent still a good opportunity. For instance, here's a property renting. It's a 3-bedroom, 2-bath renting for $1,150. It is relatively, less desirable in terms of its proximity to areas of higher incidences of crime. But here, just a few blocks away in an area that doesn't experience that, a 3-bedroom, 1-bath, same basic setup, $1,350. So it's only losing about $200 in rent for that discrepancy. So it's one thing to say, I don't want to be in an area that's going to cause me a lot of trouble in terms of having to deal with property problems or with folks who don't want to rent there because it may be a riskier neighborhood. So in other words, don't just assume that you're not going to be able to rent. You'll be able to rent, but there may be some other headaches, whether you're dealing, and this is something you can check out by driving these neighborhoods, is finding out what's going on with potential problems relating to graffiti or other things that you may have to calculate for as an owner in these areas. And I know there are plenty of landlords out there who are fine with this. They simply budget for having to deal with a potentially higher incidence of issues and make sure to buy accordingly. Remember, we make our money when we buy these properties. And if we take a look at homes for sale in the same area, let me just see what a range is. I want to give you an idea of what kind of range we're looking at for this particular area. And again, I'll turn on my little crime heat map here so we can see. Same exact area that I was just talking about where we were seeing a home renting for $1,300. I'm seeing a 5-bed, 2-bath for $39,200. I'm seeing a 6-bed for $85,000. Definitely some opportunities here. If you want to go more into downtown, depending on what your personal bent is, there's plenty of opportunities. Here's a 2-bed, 2-bath condo for $299 right near downtown. There, again, it's another market that's showing a lot of interesting options in terms of variety of price. Here's a 3-bed, 2-bath, $149.9 in an area where absolutely it's near McKinley Park, where you could absolutely expect to get a return on investment on that property with some of the numbers we were seeing relating to what rents are going for. If I zoom in on McKinley Park here, let me see what kind of rents we're getting there. I'm not seeing anything immediately for rent right in McKinley Park, but just a few blocks away, I'm seeing $1,800 for a 3-bed, 2-bath, $1,600 for a 3-bed, 1-bath. So definitely some opportunities. So you might want to take the time to check out Chicago. What's funny is one of my sons is interested in going to school in Chicago, so we're going to probably take a trip out there so that he can visit the school he's interested in. And maybe I can do something from Chicago, talk to a local expert, and maybe look at some of these areas that look like good opportunities. We'll see if maybe I could pull that together between walking all over campuses in Chicago. If any of these interest you, let me suggest that you take the time to go and analyze them yourself, see if they look as sexy to you as some of these numbers would indicate they should. As always, it is always my goal to give you more value and information than the time that you spend listening to the show. I hope that's been true today. Thanks again for listening, everyone. I'll talk to y'all next time.